Alright guys, so the first thing we're going to be doing here is going to be doing a portfolio overview. I'll go through all my entire portfolios. We'll go through my portfolios, my fiance's portfolios. So we have TFSAs, we have some non-registered accounts here, and I'm just going to go through them really quickly here. So the very first one I'm going to talk about is going to be the TFSA on Wealthsimple Trade. That's going to be the first brokerage we're going to kind of do an overview of. And like I said, like I mentioned already guys, if you guys want to sign up for anything, I do have links in the description of the video for all the different services and tools I use, as well as for today's sponsor, StockUnlock. So you guys can check that stuff out if you guys want to support the channel. So the TFSA here we have is $107,000. The one-day return since doing this account is 1%. So that's $565. The 1 week return inside the TFSA is about 0%. So not too much happening over the last week or so. Just some dividends and the market's kind of going up and down. The 1 month return for the TFSA is up 3%, which is $2,930, just shy of under $3,000. So lots of growth, a little bit of growth actually, I should say, in the past month for the TFSA. The 3 month return is 3%. So more or less the same happening over the past 3 months. The 1 year return is 4%. And we've seen a lot of this gain kind of coming since the beginning of the new year. 2023 so far has been pretty good for our portfolios overall. And we did see a bit of a recovery. And then the all-time return inside the TFSA is 13%. That's $12,000, $666 since we first started investing way in the back of 2020. So that's when we first started the fund. So this $107,000 or so, $100,000 I've been building up. A lot of people ask questions on this channel like, how do I have that amount even though it seems like I over contributed? Well, the real reason why is I had two TFSAs actually. I had two TFSAs originally on Wealthsimple Trade, or Wealthsimple I should say. I combined them, the two into one, but a lot of the gains from the previous one didn't carry over. So it looks like I over contributed if you guys did the math, and a lot of people leave this comment on my videos, but like again, a lot of the gains from the previous account are not included in this one. So I get that question a lot, but I just figured I'm going to kind of answer that question, so hopefully I don't get that again in today's video. But a quick little overview of the stocks inside the TFSA, and you're going to see a lot of overlap between our different accounts as we're trying to work things out. But the main stocks that I hold inside my TFSA is we do have a mixture of American stocks and Canadian stocks. So let's kind of start from the bottom, our biggest holdings here. So the biggest holdings we have at VFV, that's going to be S&P 500. We have about $53,000. It's a very growth-oriented fund. This is our U.S. exposure, so that's going to be the big chunk of the account. Very much focused on stock growth, very low dividend yield. Our second biggest holding is going to be VDY, which is the Canadian exposure, and this is focused on growth plus dividend. This is kind of like a mix of the two, so it's been doing quite well for us. And then we have some individual stocks as well as some other ETFs. So XCI is one of the ETFs I'm basically investing into for my covered call or passive income. Any money I don't use for my covered call or my high yield funds, I throw into here to kind of protect it just in case. And we also have some individual stocks like TD, TELUS, Fortis, CNR, ATD, and AQN. So a mix of growth, dividends, and some high yield ETFs like HYLD and then HDIV. Big changes I'm going to be making for the TFSA is probably going to be diversifying some of the passive income a little bit. We have a lot of HYLD, which I've been loading up on. We have some HDIV. I think they're all great funds, but I do want to kind of diversify a little bit. So maybe kind of split that up a little bit more, maybe add a third fund. I'm kind of looking at some different options here, maybe look at HMAX or something. I'm kind of just thinking about kind of just dividing a little bit and having that passive income more spread. So that's the TFSA. Let's jump inside the personal account and we'll go from there. So before we go any further in today's video, I just want to do a quick little shout out to today's video sponsor, StockUnlock. StockUnlock is a research tool that I've been using on this YouTube channel to very easily analyze stocks and look at information and get information about all the different stocks out there that I've showcased on this channel. And one of the coolest features about StockUnlock is the ability to quickly see things with the insights feature. So we can quickly see information about stocks. In fact, we can even compare stocks together. So let's compare a Domino's pizza stock to pizza stock. So here we can compare the two stocks and see some bit different information about them. We have a nice little StockUnlock insight score, so you guys can compare that between the two companies. We have a quick little blurb to talk about the companies, and here we have some more information like the dividends for the two different companies. And it's cool to have all this information in one place where we can kind of compare different stocks to each other, as well as just bring up one stock and compare all this information by itself. So this is cool stuff. It saves you a lot of time if you're looking to analyze a lot of different stocks. Sometimes I just use StockUnlock to just briefly kind of like take a peek at a stock, take a look at some information like the dividends, the total returns. Since I am a dividend guy, I like to look at things. We can see things like the dividend yield. We can see the 5-year dividend growth rate of 17%. It's actually pretty sweet for Domino's Pizza. We can see the payout ratio and all kinds of different cool things like that. And one of the coolest features I like to see is the total returns tab. We can actually compare it to the S&P 500, and this is total returns with dividends reinvested as well as stock growth. So we can see here that Domino's Pizza has actually been on a pretty good run, giving a total return of 686% since 2013. When it comes to pricing for StockUnlock, there is a 14-day free trial that you guys can check out to get started and get your feet wet. After the 14-day trial, you can sign up for a yearly plan, which is $10 per month, which I think is honestly a pretty good price. Or there is a monthly plan that you guys can pay for $12 per month. So in summary, I love StockUnlock because it saves me a lot of time when it comes to researching and learning about new stocks. The cool thing I like about it is it features all Canadian stocks from the TSX. So if you guys are a Canadian investor, it's definitely nice because there's a lot of tools out there that don't actually showcase a lot of information about Canadian stocks. If you guys want to sign up for StockUnlock, there's a link in the description of today's video. So the non-registered personal account is going to be the next account I'm going to talk about, and keep in mind at the end of doing these little portfolio reveals and stuff like that, as we go through them, I'm gonna have like a bird's eye view so we can see all the portfolios in one place, so you guys can see all my accounts together. But I'm just going to go through them really quickly one by one here. So the personal account is much more focused on Canadian stocks, dividend stocks, eligible dividends. All time it is up 9%, so it's doing quite well, but it is a much smaller account from the TFSA. And this might be the last video that I do on this channel before I actually swap the personal account into my fiance's TFSA and kind of spread it out in there. That's one of the things I've been thinking about doing. She has lots of contribution room, so we're going to take some money up, I'm going to pay for my taxes and kind of finish all that stuff up there, and then anything extra I'm probably going to throw inside my fiance's TFSA. So if you guys are watching this video, this might be the last time I actually have this account, but we'll kind of see how things go because I'm probably not going to sell all the stocks in it just yet. So this account is much more Canadian focused. So we have some of the other stocks we mentioned earlier, like AQN, ATD, but we have some more dividend payers inside this portfolio. That's CNQ, CNR, CTC, Manulife, Power Corp of Canada, a lot more dividend payers, and we have less focus on the American stocks, right? We have much more diversified portfolio and Canadian dividend stocks because since it is in a personal account and a non-registered account, those dividends and capital gains are going to be taxed, right? So I want to kind of be efficient with that. So that's why it's a lot more dividend focused. But like I said, it's way more efficient to have this in a TFSA. And since my fiance has a lot of contribution room, we will be kind of moving some of the money into there. And I also have my RSP I can work on. So I actually don't have an RSP. I don't have anything in it right now. That's something I'm actually going to be looking to build upon as well. Now the next account we're going to talk about is going to be my ESSOP with my employer. So I work for Loblaws. Some of you guys might already know that, you might not. This is basically, they have a program where I can basically put money into the company stock every paycheck and they match it 25%. So it's a great way to buy a good quality stock, a good growth stock, and also just get an instant 25% return on my money. And it's been performing quite well. It's obviously a small amount since I just started this recently. I've been doing it for almost a year now or so. So you got about $1,000. It's not very much. But it is something. The portfolio yield is about 1.27% since Loblaw is a more of a growth oriented stock, but we do already getting some gains and some yield on cost, so that's super cool. And Loblaw is like a more of a dividend growth stock as well. Not super crazy highs, but they are aggressively growing that dividend. And again, this is more of a long-term kind of investing type of stock that you would invest in when it comes to Loblaw. So this is one that's kind of been growing on the side, but once again, I think it's important to look at all your accounts and add them up together. The final portfolio we're going to talk about before we kind of go into the next part of the video is going to be my fiance's TFSA. And this is about $12,000. Like I mentioned, she has tons of contribution room, so I'm most likely going to be moving probably within the next couple weeks or so, moving that personal account, a good chunk of that into here, whatever we have left over once we pay our taxes and all that kind of stuff. Portfolio yield is about 3.33%, so she kind of has a mixture between things. She basically holds my portfolio with just the ETFs, and we will be expanding on this as time goes on, but it's a very basic portfolio. She doesn't really care to look at individual stocks and do all that kind of stuff. She just likes to invest and have a combination of growth and dividends and passive income, kind of a similar approach that I have, but just doing it in a much easier way, which is buying the ETFs. So she's got that 3.33% dividend yield, a little bit of yield on cost, but more or less sitting the same. It is a newer account, and she doesn't invest as much as I do. She's got 406 in dividends, so that's kind of nice. And her biggest holdings are HYLD, VDY, and VFV. So those are going to be the biggest ones. Obviously, VDY and VFV, I guess VFV probably being her biggest holding here. About 70 shares she has there, so that's quite a bit. And then VDY and then HYLD. And I think going in the future, we might add one more fund in here. I'm just kind of looking at things here, but it's a very simple portfolio, very similar to mine, but just done in a much more easier way. And if we do a recap of all of our portfolios, we have $135,000, a little bit of growth since the last update because the markets have went up quite a bit. Both in regards to US and Canadian stocks as well, and we did get some dividends. So our portfolio yield is 3.776%. That's our total yield, and our yield on cost is almost 4%. So we've seen some nice little growth there. Our annual income is $5,000 per year, which is about like $460 or $70 a month. I'm not too sure. But that's kind of the main features there. We also have the tickers here, so you guys can look at the individual stocks here. I just want to remind you guys, if you guys want, there is links in the description of this video to check out Blossom, where I keep my portfolio on there. You guys can see 100% all the stocks I own. You can kind of go through it yourself if you want, and it is free to access. So if you guys want to see my entire portfolio, all the stocks I personally hold, you can do so on Blossom. And just really quickly, guys, we'll talk about the dividend income for our portfolio. I'll show you guys the income we made from our stocks for the month of April, as well as do a recap of our total income that we made of all time. Since this is a dividend investing and passive income and growth-based channel, we kind of like focus on a little bit of everything here. So here's the dividends recently. So nothing really major coming towards the end of April. The end of April, we got some dividends from XEI, so we put those back in. We did get some bigger dividends from TD, so those finally came in. Those came in at the beginning of May, so they won't be added to our April income, but will be a nice, good, fresh start to our May dividend income. So that's a $25 dividend from TD in our non-registered account, a $9 dividend from POW in our non-registered account as well, and then our TFSA we get about $39. It's about $40 or so from TD. So just before we finish up the video here, I'll do a quick little recap on our monthly dividend income. So this is something I've been kind of like doing traditionally on this channel since I first started, and that's recording the monthly dividends. We started way back in the month of January 2020, so it's been quite a while, but the dividend income has just been progressively going. We keep reinvesting, and this is one of the big things I focus on whenever I feel like things are kind of slowing down, I feel like I'm plateauing, or I just feel like, I'm not getting where I want to be. I always kind of reference the sheet, see where we came from, and see how things have grown since we first started. So obviously it's been a while since we first started our portfolios. Right around April of 2022, month 28, me and my fiance started like putting our money together to kind of track dividend income, and we've seen quite a bit of increase. And it was really slow in the beginning here, not making a lot. But when we put in that work, it kind of just compounds and sets the stage for things to kind of grow in the future. And obviously the portfolio has changed a little bit since then, right? We've kind of added some different funds. We kind of tweaked the portfolio a little bit. But nonetheless, things have been going pretty consistently. We're on month number 40, which is it took a while to get here, and we just made $574 this month, so that was pretty sweet. Total dividends of $6,347. Haven't put May's dividend income in yet, obviously. But I just want to kind of highlight that things have just been consistently growing. And yeah, so April was a high, I think, for the channel, $574. Yeah, that was a high for the channel. So that's our highest dividend income yet. I thought we were going to hit 600, but it looks like the TD dividend didn't get into my account since May. So I'll just put that in for May. But nonetheless, new high on the channel. Lots of dividend income, and it's slowly getting there, obviously. But if you keep at it, you keep grinding away, you guys will get there, and obviously you guys can see with the spreadsheet. And the last point we're going to cover in today's video is going to be the total return of our stocks. So this is an important aspect. It's kind of a good way to zoom out and see how your efforts kind of grow over time and kind of really see how a stock is doing. So lots of interesting things here I'm going to go through here really quickly. Now, because we focus on a couple different things on this channel, I have to highlight some things before we go any further. So the revenue tab here is going to be the dividends, which is going to be a big chunk of the way I make money inside my portfolio. I like dividends, distributions, you can call them whatever you want to call them. It's basically getting passive income on a regular basis. And then we have stock appreciation. So we take those two, combine them together, we get the total gain. And a lot of stocks that have dividend growth or different things like that, it can be, or even just high yield passive income stocks, it can be hard to kind of track the return. So it's cool to use tools and different things to kind of track the total return, so you can really see how a stock has been performing since you basically first started investing into it. So here's the percentage for the total return here on the left side. So we can see like the ticker here for VFB. We can see the book cost, quantity, average price, all that kind of stuff. We can see the total gain, which is the total dollar amount, and then we can see the total percentage gain, which is like 4.77%. So we'll go through these numbers really quickly so you guys can see. So VDY is going to be the next one. This is one of my better performing stocks. Obviously, Canadian stocks have been performing much better than US stocks over the past year or two. So that's kind of just the way things are, but it's up 20%, so that's been a pretty good one. Some of the passive income funds have actually been performing not bad from a total return perspective, but once again, it depends on which sectors, which markets those indexes are in. Nonetheless, obviously they pay me pretty good dividends, right? I have $13,000 in HYLD, paid me $660, so that's the whole purpose of the fund. But total return kind of is up 0% here, so not too much going on there. TD, we have up 12% in total return with the dividends I just got. I don't know if they're included in here, but they usually get updated pretty quickly. ATD, obviously one of my best, actually is my best performing stock, up 30% all time, total gain of 1,108, and we can see the revenue. Obviously the dividends are a lot less, but this stock really is focused on growth, right? So that's obviously we're going to get most of the growth coming from the stock there. AQN, one of the red stocks, actually I think the only red stock in my portfolio right now. at the time of doing this video, other than I guess HYLD is, I mean, the markets are going up and down. I think last time I checked today, the markets did go down a fair bit. So obviously things might be pushed down, especially the US side. But AQN here, we have a total return of negative 18%. So it's slowly getting there. You know, I haven't been investing too much into AQN, but I've been dripping a little bit here and there. I haven't been investing anything of late because I do have some taxes and some bills to pay off. So once all that stuff's paid off, I will get back into investing on a regular basis. Here we have CNR, so up 5%. So that's kind of doing its thing. TELUS is up 9%, obviously a dividend stock. And you can see with the dividend stocks, like, you know, the revenue really helps bring this up, because if we just take in the stock appreciation, you know, 1.68% doesn't sound too sexy or anything like that, but you add in dividends, it goes up to 9%. So it makes a big difference. HDIV, our other Canadian covered call ETF, up 5%. Manulife up 19%. So this is a big dividend company. Fortis as well too. We have Loblaws, which is hooked up with my employer. Unfortunately, the information here does not display correctly. I'll have to like do a video where I kind of go in a deeper dive into that stock, but it's actually doing quite well. Power Corp is actually in the green finally, so that's good to see. CNQ obviously has been doing pretty good. XCI for us is up 0.13% since we first started investing. And then Canadian Tire is doing pretty good too. But some of these stocks at the bottom are obviously pretty small holdings. So they're probably going to perform a little bit better or look a little bit better because I'm not buying into them on a regular basis. But anyways, guys, that's a quick little recap of the total returns for my Wealth Simple Trade stock portfolio.